Hello, good afternoon, everyone, and welcome to the panel discussion today on decentralization in the financial sector. We have a stellar panel of experts today with us here to deconstruct decentralized finance or DeFi and the opportunities and challenges that it presents in the financial system today. Just to let everybody know that the session is being recorded, I would request the audience to please ask your questions to the panelists. You can just put in your questions in the Q&A tab. I will also be sharing during the course of the discussion the work done by the panelists on DeFi. Please feel free to browse through them. I'll hand over the stage now to Shehnaz, my colleague, who will also be moderating the session. Shehnaz, on to you.
Thanks a lot, Swarna. Hello, everyone, and welcome to this session on decentralization in the financial sector. I think as policymakers continue to debate the regulatory responses to crypto assets, the financial system seems to be witnessing the rise of another manifestation of the crypto economy, or perhaps decentralized technology in the form of decentralized finance. Typically, traditionally, existing financial system operates through centralized regulated entities. I'm sure our experts here will today deep dive into what DeFi or decentralized finance is. But just to kind of broadly sort of give the context, it is essentially the provision of financial services or products to the use of decentralized ledger technology, where there is an elimination for the need of certain centralized traditional financial intermediaries. Now, of course, a lot of people argue that such disintermediation and decentralization is necessary or helpful for the financial sector to provide frictionless, faster, and more efficient financial services. But I think just with generally with decentralized technologies, it comes with a set of its own risks in terms of operational risks, in terms of security risks, systemic risks, investor protection concerns, and also legal risks. Now, often questions are raised regarding the real economy use cases of DeFi, whether decentralization itself is desirable. Now, what are some of the risks that DeFi may pose? And are financial regulations, which are essentially designed for centralized systems, sufficient or adequate to respond to developments in the financial sector relating to DeFi? Now, to help us deconstruct some of these pertinent issues, we have with us a stellar panel of experts here today who have actually extensively done and also written on DeFi. So it will be great to hear their insights on some of these emerging issues in the fintech space. At Vidhi, we have been generally working on various elements of decentralization, whether in terms of blockchain technology or whether in terms of crypto economy. So this, as a natural corollary, we are generally keen to sort of understand and explore the legal and policy implications of decentralized finance. And I'm really looking forward to our conversation with our experts here. So we have with our Professor Douglas Cerner, Kerry Holdings Professor in Law, University of Hong Kong. We have Dr. Eva Salami, Reader in Law and co-director of the Center of FinTech, University of East London. We have Sumedha Deshmukh, Policy Advisor, Crypto Council for Innovation, who's also currently pursuing her PhD in University of Cambridge. And she was also the lead author for World Economic Forum's Decentralized Finance Policymaker Toolkit. Thank you so much, everyone, for joining us. In terms of today's session, we will start with the opening remarks by the speakers, followed by a round of questions and answers. Audience, please do send in your questions. We did receive certain questions at the time of registration, so I'll try and see if we can integrate them in the questions to the speakers during the course of the conversation. And I think we'll start off with the opening remarks. I'll request the speakers generally to perhaps talk a bit about today's theme of discussion, as well as their work in the decentralization in the financial sector. Professor Douglas, we can start with you.
Thanks very much, Shehnaz, and thanks for the invitation to be here. It's certainly an interesting and significant week for this topic. You know, this is a tension that I think has been going on for a long time. And in some ways, if we think about discussions of decentralization in finance today, we're really thinking of a variety of things coming together. First, enabling technology, the idea of distributed ledger technology combined with blockchain cryptography, combined with essentially a philosophy, the idea of trying to develop systems that operate on the basis of technology as opposed to trust in governments or intermediaries, and a reaction to problems which emerged particularly in the context of the 2008 global financial crisis. And we see these pieces come together really in the context of the launch of Bitcoin in 2009. And we almost, from that first point, see something that my co-authors and I write about, and which I think we're seeing in global markets right now, which is a tension in between sort of ideals of decentralization and forces which have a tendency to pull towards centralization. And it's interesting that we see this almost from the beginning. We see the emergence of cryptocurrency exchanges really from 2010. We see the development of stable coins linking cryptocurrencies to fiat currencies really from 2014. We see the development of a range of different structures that often mix aspects of centralized and decentralized finance. And over the past year in particular, many of the challenges from the standpoint of the development of decentralized finance have come from aspects of centralization. The fact that DeFi systems have ended up not being actually decentralized, but often centralized. Or even if we look in the context of digital asset markets more generally, the emergence of some very centralized players. And in some ways, I think the underlying theme here is that regardless of how one wants to structure finance, many of our regulatory considerations still arise. In other words, even in a decentralized system, you can have market failures, which can result in collapse of structures and losses. Those are financial stability problems. It's very difficult to avoid fraud when we are dealing with money, either from the outset of the design of systems or in the context of operation, and that is consumer or depositor or investor protection. From the standpoint of market functioning, one of the key aspects is really around information. And as we see, even in a decentralized system, information is central to the functioning of markets. And so one of the main arguments that we actually make in the paper that you've put in the chat is the idea that even in the context of systems which are designed to operate in a decentralized fashion, one needs to actually embed structures which reflect these regulatory necessities in order for markets to function. And that is the idea of embedded regulation or embedded supervision. But I think the big point that I'm going to leave with is I think that when we are talking about aspects of decentralization of finance, we have to realize that there is a continuing tension between centralization and decentralization, and that this is something that none of the aspects which we've approached so far seems to have eliminated.
Thank you so much, Professor Douglas, for setting the context for today's discussion. Dr. Eva, maybe if you can go next and share your initial thoughts.
Well, thank you for this.
We're unable to hear you.
Can you hear me now?
Yeah.
Brilliant. Well, thank you so much for inviting me to this event, and it's a delight to be here. Well, I have to allude to the brilliant introduction given by Professor Douglas Anna, and without sort of, wanting to repeat, the brilliant intro that he's given. Yes, decentralized finance, of course, is that opportunity to enable individuals, or presents the opportunity to enable individuals, potentially now we're seeing interest by institutions, the opportunity to actually transact for individuals on a peer-to-peer basis using basically operated in the way that traditional financial institutions would have operated, sort of services provided by them, whether it's sort of lending, borrowing, investment management, insurance, and the like. Obviously, using smart contracts now as if you like, what would have been the intermediary of the bank. But of course, we know that there are, as Professor Anna alluded to, we know that there are, huge issues with the way that these, with the way that decentralized finance is working, primarily as a result of the fact that the current regulatory framework domestically and even globally across the world haven't begun to provide specifically for decentralized finance activities. And so we're seeing quite a number of issues actually coming up. And one of the first issues that I would like to talk about, that I've spoken about quite in so many places and around the work that I've done, is around the need for decentralized finance transactions and platforms to actually bring on board KYC, which is know your customer requirement. So at the moment, we know that these transactions happening on these platforms aren't required, aren't regulated to be required to provide the know your customer requirements, which of course are requirements that enable people to be able to fulfill their identities as exist in traditional finance before they engage in financial activities. And the reason, of course, why this is pertinent is to avoid things like, various types of financial crimes, such as money laundering and the financing of terrorism and the like. And we know that there are track records of the usage of decentralized platforms, decentralized finance platforms to actually facilitate money laundering. And in fact, actually, the DeFi sector has grown by 263%, obviously, as we know, in the first quarter of 2006. Sorry, money laundering in the DeFi sector, money laundering in the DeFi sector has increased by 263% in the first 2 quarters of 2022. And that's huge. That is a big deal. And we know that these activities take the form of things like stealing funds from exploits and then misusing them on DeFi platforms, only because the regulation that we have at the moment doesn't actually cater for this. And so there are big issues around sort of the fulfillment of KYC on DeFi platforms. Other issues that come up, as again Professor Anna alluded to, are things like the cybersecurity issues that we can't sort of turn a blind eye to, and in which case regulation too can't turn a blind eye to, because we know that a lot of these transactions engage in transactions that typify things like banking in our traditional finance setup and setting, and as I said, different other investment activities. So we can't really turn a blind eye to, if you like, the almost weekly issues that come up with the hacking that goes on those types of platforms. And so there's the current regulatory framework doesn't catch these types of activities happening on decentralized platforms that would have cut them under your traditional finance setting, whether as operational risks that need to be catered for within regulatory frameworks domestically and also as provided globally. And, these are issues that really would need to be looked at. That, you know, the approach to sort of dealing with DeFi in this context and the problem and the challenges that DeFi poses in this context could perhaps sort of look at maybe the standardization, because this is quite prolific a problem across DeFi protocols. Perhaps looking at the standardization of approaches to regulating standardizing approaches to instituting, if you like, proper cyber security frameworks, such as, for example, maybe looking at standardizing approach to RegTech provisions and solutions that actually can't deal with these. And then other issues also include that we can't sort of negate, actually, when we look at these issues, are the constitution of a lot of these DeFi protocols. I mean, our traditional financial institutions would, the regulations around them would usually sometimes bring the actual regulation, bring the actual institution, require the actual institution to fulfill regulatory requirements, or even individuals in those institutions. Whereas with DeFi, we don't have any of that. And if we look at the mechanisms through which or look at the formation, if you like, through which these DeFi platforms are constituted, we would find really that the strengthening, I'd say, of the governance frameworks that have an impact on conduct activities on these platforms sort of really is important. So whereas in traditional finance, we have, as I said, we have standards for the conduct of both institutions and individuals. This doesn't actually exist. Primarily also because DeFi platforms really are based on different governance and conduct assurance mechanisms, and most often are done through governance tokens that bestow holders with voting rights. And although these are similar to most common equity structures, they're not subject to the same corporate governance framework. So, for example, you have DeFi protocols that have very high concentration of voting controls. And we know from research by blockchain analytic firms such as Chainalysis, really, that in their assessment and research of governance tokens, for example, recently did an assessment of 10 governance tokens and actually found that these are governance tokens on DeFi platforms, and actually found that fewer than 1% of token holders on those platforms, which of course, the token holders able to sort of make decisions, and found that fewer than 1% of token holders actually held like 90% of the voting rights on those platforms, which then it really goes to the heart of the criticism as to how decentralized these platforms are, and also, again, alluding to what has been said earlier. And this, again, impacts on the regulatory framework around the need for the regulatory framework around DeFi activities. And of course, there are data privacy issues as well, quite critical. We know the transactions on blockchain, we say, are quite transparent, but then, of course, we also, know that in the transparency, there are opportunities, such as sort of tracking tools that we sometimes can see on Twitter and Telegraph, which are widely used by the public to track large crypto asset transactions, for example, happening on things like, decentralized exchanges. And people can actually make assumptions, strong assumptions, and different types of hypotheses as to who is actually engaging in those transactions. So again, these are areas that, perhaps a certain degree of regulation would need to sort of come on board to track. And other issues such as, recourse, having a proper recourse mechanism for transactions happening on DeFi platforms are quite key. So that, for example, where there are major issues around, the hacking of platforms that has resulted in, retail type investors losing monies, or losing assets, sometimes even to the tune of millions. Sometimes they have been unable to, the platforms have been unable to actually afford the full restitution of these assets that have been stolen or lost by one means or another. So again, there's a whole need for strengthening of the recourse to these types of individuals transacting on DeFi platforms. So that's quite key. And then, of course, the legal clarity around sort of, smart contract-based business activities. There needs to be, the clarity around the enforcement, if you like, of those types of, activities, particularly when issues come up, when disputes arise. There seems to be whereas in our traditional finance setting, we have situations where people can actually bring an action against an institution, or we know who can be brought an action can be brought against to actually resolve certain types of disputes. In the smart contract-based type activities, such as those existing on decentralized platforms, there isn't that clarity as yet. So it remains really unclear which smart contracts, for example, are legally enforceable. A lot of times this will depend on the intentions of the contracting party or actually the jurisdiction. So there's a lot of clarity that needs to be created around that. And more legal clarity in commercial law, if you like, is necessary to reinforce requirements, and actually in order to foster a trusted environment for smart contract-based businesses. And there's so many other aspects as well. The stablecoin issue.
I think I'll sort of interrupt you, because I do want to kind of discuss these issues with you in a little bit more in depth. I think maybe in the next round of questions, maybe because there are some of these legal issues that I think, are of so importance that perhaps we can have a little bit of more in-depth discussion on that. I'm sorry to interrupt you here. Maybe I'll quickly go to Sumedha and then again come back to you and discuss sort of some of these legal issues. Sumedha, do you want to sort of quickly share your initial thoughts on this, and also to maybe talk a little bit about the research that you have done in this space?
Absolutely. And thank you so much for having me. Can you hear me okay? I'm getting okay, great. So yes, thank you so much for having me. And, I agree with a lot of the points that have already been raised. So I will keep my comments relatively brief, but maybe to take a step back, I'm not really familiar with the audience, so maybe to take a step back on what we mean by DeFi and kind of take a look at the space and then go from there about the discussion. DeFi is quite a complex ecosystem that has been evolving fairly quickly. So when we talk about DeFi, it's actually not one particular type of service, and actually cuts across multiple layers. So it makes it a very complex challenge for policymakers and regulators who are used to interacting with centralized intermediaries or actors that they can kind of rely on as the regulated entity. So when we talk about DeFi, we're actually talking about, in theory, which is some of the points that have already been raised, disintermediated services that can be provided along a range of layers within financial services, usually on a decentralized settlement layer. So we have kind of the asset layer, which could be algorithmic stablecoins or asset-backed stablecoins that are provided in a decentralized manner. You have the application layer, which are really what we traditionally associate with financial services. So these are decentralized exchanges that provide liquidity, credit provision, derivatives provision, insurance. And then there's a layer on top of that, which is aggregation. So kind of yield management, this yield farming is what we usually hear. So really, I think we start with a fundamental question here of what are we even addressing when we talk about DeFi? And I think that leads on to a lot of the questions that have already been raised on how do we think about policymaking and regulation around this new area. And so I think this brings up a few questions. So what are kind of the distinctive aspects of DeFi? Is there a difference between DeFi services and traditional financial services? How do we think about that differently then? So I know they've raised, for example, embedded supervision, embedded reg tech, which has been coming up. How do we think about the new possibilities that are present when it comes to a new model? Again, what are the new risks, which we can get into a bit more in the discussions? And what are the points of integration and separation with the traditional financial system? So we're, in theory, DeFi was something that was going to be this new peer-to-peer transaction and service provision space. But we see now that there's been a lot more integration and interest from traditional financial players. What does that mean for policy and regulation? And then what are the new questions that are raised by the model present in DeFi? So I think these are some of the big questions that policymakers and regulators are grappling with today. And I think, to date, we've seen the same risk, same regulation kind of approach from a lot of the big players out of that are looking at policymaking and regulation for financial services. But I think we have to ask ourselves the question with crypto, digital assets, and decentralized finance, are the same rules actually going to be applicable to this new kind of system? And are we sacrificing some of the new potential of the technology? And are we also kind of creating frameworks that are not fit for purpose, that may be missing some of the novel risks or novel things that are present with DeFi? So I think there's a lot to kind of unpack in the way that we think about these things. And I think the last thing I'll say is, this is really early. We're really early days with a lot of this stuff. And I think it remains to be seen how it's going to play out. And I think a lot of that is going to come down to the way that policy and regulation is made. So I think it's very important to kind of think through now how those systems look. But yeah, I agree with a lot of what's already been said in terms of the risks that are present. I think we see a lot of the same risks that we've seen in financial services before. And then we see new risks that come on the technical and operational side. For example, basically all of DeFi is built on Ethereum. So that creates a lot of dependency on one system, raises a lot of the questions around decentralization that have already been raised, operational around the way that governance is managed, and new financial risks in the way that a lot of these financial products are structured. So I think, before I started with that, unpacking the layers, because I think before we get into the policymaking and regulation, we really need to think about what are we addressing and where does it fit into the system in a very thoughtful way. And then the last thing I'll just say is on DeFi specifically. I think when we're addressing DeFi, we have to think about decentralization as the core factor. Is it actually decentralized? And I think that's something that is going to be the big question at the core of policymaking and regulation. So I think we think about it in terms of three terms. One, technology. Is the technology open source? Two, is the governance dispersed? And three, does the ecosystem include many? And then when we look below the surface, as people have already raised, many of these DeFi projects are not so decentralized in practice. So I think we're also going to have to be thinking about how we measure this very critical aspect of DeFi is the D. And I think that will be a big point moving forward as we think about the policy and regulation of DeFi.
Thanks, Sumedha. I think you definitely sort of got us back to the foundations and perhaps even understand some of the basic questions before we start talking about, the other bigger questions in place. So I think just going back to the basics, I would like to in fact pose this to you because, so what are these motivations that are sort of prompting financial sector players or the private sector to move away from centralized systems to this whole world of decentralized systems. Of course, I completely agree with you that whether there is full decentralization or not, that is still, I think that still remains a sort of an illusion. But the fact that there is a tendency, or there has been a debate to move towards decentralized systems, I think what's the kind of efficiency gains that we are thinking about? I think that is one thing that perhaps will be useful for our audience also to kind of understand. And secondly, what are the kind of areas within the financial sector where we are actually witnessing these kind of disruptions? Is it like across various services, whether it's lending, payments, or anything, or do you think there are only perhaps right now a few sectors within the financial system where DeFi has actually been able to at least show some sort of innovation potential? Sumedha, that's for you.
Yes. So maybe I'll just start with the elephant in the room, which is that we see the risks of centralization playing out right now with FTX and Binance. And to Professor Arner's point, this came out of the financial crisis. Bitcoin was a direct response to frustration that people felt after 2008 and people being irresponsible with their money, the skewed incentives within the system that led to people's high risk appetites with assets that were not their own, that affected the retail customer. And I think you see that backlash on a political front. You see that backlash in the way that people approach financial services, and you see that in the trust present within the system. And at the end of the day, financial intermediaries, their primary role is as brokers of trust in a system, right? And so I think DeFi and the broader crypto and digital assets movement comes out of this idea that people want more control and ownership within the financial system. Again, whether that's actually playing out, that remains to be seen. But I think that was a lot of the intent behind this and why people have responded to this space. I think there's a lot of ideological intent tied up in the way that crypto and digital assets have developed. And of course, there's a speculative element as well, which we have to be honest about. People see that this is a place where there are high returns and it's a new space and it's the early days of technology and internet, and there are gains to be had there. But I think if we go all the way back, I think that's where we really started with a lot of this. And I think we're seeing it develop in different areas, as I said, of the financial sector. I think people are seeing, this is stuff that's been intermediated in the past, and they're really experimenting now with what can be disintermediated and how do we use this new kind of settlement layer to create new forms of services. So like I said, you're seeing a lot of the kind of classic financial services, credit, lending, insurance, a lot of these types of products being kind of built in a decentralized manner. So I think from the retail perspective, a lot of it is about ownership and trying to kind of not necessarily be interacting with the financial system that people may or may not trust. And also this kind of promise of high returns and gains, which we've seen in the early days of the technology. From an institutional perspective, I think a lot of it is also kind of, they want to get in on the returns. There's a lot of kind of PR cred that comes from being involved with this stuff, I think, if we're being very honest about it. And I think they're really interested in the technology too. Obviously, the kind of financial guts of the system that we have today, they're quite, they've developed in a way that has been kind of quite cumbersome in a lot of these institutions. So I think there's a lot of experimentation on how a settlement layer, for example, on blockchain might realize efficiencies. Though, I mean, I've been working in this space for a long time. There's been experimentation for a long time, and we haven't really seen anything at scale. so a lot of it, I think, in reality has been kind of more PR for some of these firms. But I think in order for that to actually gain traction, there has to be coordination and network effects. So they're going to have to really rethink the way that they operate their business models, which is, as we know, a really slow roll on, especially when you come to financial institutions. And I don't think that's necessarily a bad thing, because obviously they're managing people's financial assets. So we shouldn't be rushing into these things. But I do think, like I said, there's this retail side of things with the customer, but there's also kind of an institutional side that we're seeing play out with more kind of integration with the traditional financial system. And the last thing I'll kind of say is, because it's early days, I actually think that a lot of people that are talking about this technology and regulating it or doing policy around it, many of them haven't even had the opportunity to play with the technology and see what it is and what it's doing. And I think that's really key. Before, in the US, I can give the example of the US, actually, regulators and policymakers are not allowed to, as of recent guidance from the government. And not that I think that they should be holding it. And I think there's obviously the investor protection and the type of kind of conflict of interest regulations that exists for a reason. But I think in sandbox environments and really getting to grips with what this technology is, I think that's going to be really important for creating smart regulation around this, because I think there is, as we said, novel risks that need to be understood, and also novel potential around the way that regulation takes place. So again, some of these ideas of embedded regulation and enforcement, really. So in the US, for example, all of the largest enforcement actions in recent history have been crypto related. A, because large crimes happened using crypto, but also B, because the transparency of the records. We've known that money laundering is a problem for a long time, and they've had trouble enforcing it. But now we have tools with things like blockchain that we should really be using to catch people where we can. And so I think a lot of it is also kind of understanding the novel capabilities of the technology and really using that to further the goals of financial integrity and consumer protection.
Sure. Thanks a lot, Sumedha. I completely agree that market is still evolving, and perhaps we need to sort of sit back and understand, the innovation potential as well as the kind of risks before we sort of start thinking about policy responses. I think the fact I think that we are seeing centralized, entities moving from centralized system to decentralized ecosystems sort of still brings certain questions about risks. And I think the crypto economy perhaps is the best example in terms of the kind of risk that we are seeing. Professor Douglas, would like to bring you here, as in, while policymakers are still deliberating and sort of still understanding the rise of DeFi, but I think they remain conscious of the fact that, we have to watch this space closely. So perhaps if you can highlight some of the risks that we see from the DeFi sector, specifically from a legal and regulatory perspective, I think that will be really helpful.
Yeah, I think it's interesting that it's getting close to 15 years from the Bitcoin white paper. So it's a little bit disingenuous to say that it's all new. 15 years would have taken us through an entire cycle of asset-backed securitization before 2008, from more or less advent to global financial crisis. And so, it's no longer that new. As I think Sumedha pointed out, there are mixed views on how much actually has been developed in that period and how much of the potential has actually been realized. I would say, and we'll probably come back to this with Iwa, one other area where we have seen some real focus is in the context of the ideals of sort of democratization and inclusion, and particularly in the context of developing countries where you may not have a financial system that functions at all. It is possible in some cases to think about other alternatives. So that's one. But if I think about the regulatory issues, it's interesting because what we've really seen in many cases is over time an evolution of approaches. And so at the beginning, regulators really start focusing on market integrity and criminal use issues. We see at an early stage the use particularly of Bitcoin in the dark web and a focus on criminality. Interestingly, as I think Sumeda has pointed out very nicely, today many law enforcement agencies actually prefer criminals to use blockchain-based technologies because it actually enables the tracking of networks and spider web diagrams of interrelationships between accounts and participants, which is actually very useful. But so this has been kind of focus one. Focus two, I think, really came out of an early centralization issue with the failure of Mt. Gox as an exchange. We see issues around particularly investor protection issues, questions about financial stability. But most of the discussions about financial stability continue even in the context of stablecoins. There hasn't really been something that really brings with it big risk. So there's a question about how close we're getting to that. Third level, we see around 2016, 2018 with the ICO bubble, a real focus on sort of investor protection issues. And more recently, we're sort of thinking about market functioning in the aspects of how do you protect against fraud, crime, disclosure, et cetera. And so the short answer is if we look at our sort of key financial regulatory themes in a 15-year period, we've had this space has exhibited all of the features that we might have seen evolve over hundreds of years of traditional finance. And in some ways, it shouldn't be surprising that human behavior would continue to exhibit some of these same issues, and that the technology, for some of its promise, can continue to be, if you will, used in the same sorts of fashions that human behavior has always done. And of course, I think, as both Iwa and Suneba also highlighted, the addition of the technology itself brings some additional risks, new forms of manipulation, new forms of cybersecurity risk, new forms of fraud and criminal behavior. So I think if we look at it from the sort of regulatory aspect, it's interesting to see that almost all of the issues which in some ways the hope was that the technology might address have actually arisen in the context of the markets as they've developed. And a real question going forward is whether or not one can rethink some of these approaches, and are there ways that technology can take into account some of the issues which have arisen.
Sure. Thank you so much, Professor Douglas. I mean, perhaps as a follow-up to this, because you did talk about the newer forms of manipulation or cybersecurity that seems to have come up. I mean, of course, we're witnessing how private sector is now leveraging technology for better services or efficiencies. But I was wondering how, to what extent can technology play a role in better regulation and supervision? I think you briefly mentioned about some of these technological interventions that policymakers or governments can sort of think about. And I know that you've written extensively on it, but it will be great to kind of understand, how do we respond to such kind of development, specifically in the decentralized space, and also what kind of, is technology something that policymakers can sort of think about when they are designing supervisory or regulatory approaches?
Yeah, and I think this is something that you had mentioned, and that's the idea of RegTech or SupTech, which is the use of technology for regulatory or supervisory purposes, or as my co-authors and I have argued, in the context of actually building various forms of financial infrastructure. And I think both you and Sumeda have highlighted this idea that in the context of distributed ledger technology, there are actually tremendous opportunities from the standpoint of using essentially the transparency embedded in the structures from a regulatory standpoint. the use of various systems of analytics on-chain to essentially analyze transactions, behavior, etc. One of the challenges is that such a high percentage of transactions actually take place today off exchange. And that means that it's interesting to think of this idea that, yes, you have the ideal of the technology, but so many users actually find it cheaper, faster, more convenient, easier to use systems which actually take you out of that sort of ecosystem into something else. And so that is one side, is really from the standpoint of regulators, supervisors, and operators basically using technology to better achieve these various forms of regulatory objectives. And that's the sort of RegTech, SupTech idea. The other idea, the sort of embedded regulation or supervision idea, which I think is getting more discussion, is actually that in the context of designs, when one is designing a system, one should actually take into account the fact that markets work better when they have better quality standardized information and build essentially disclosure frameworks or transparency frameworks or monitoring frameworks in order to monitor suspicious behavior. So one can actually, in the context of system design, build in certain parameters that experience and research tells us are actually beneficial from the standpoint of making markets function better and also enhancing trust and confidence in those systems. I don't honestly think we can necessarily automate everything, but there is a fair level that if we think about sort of some of the experiences with finance, both in the traditional as well as in the DeFi context, there are a lot of lessons that can be learned in the context of how we can better design apps and systems going forward.
Sure. Thank you so much, Professor Douglas. I'm glad that you touched upon, SupTech or embedded supervision. I mean, of course, that is one sort of a regulatory approach that we can look at. But I think one of the fundamental questions that's, I think, Dr. Salami, as well as a lot of our other speakers have also highlighted, is the fact that to what extent can we think about traditional financial or existing financial regulations, which have typically operated based on centralized points of regulation. Are they adequate enough to sort of respond to these developments in decentralization in the financial sector? One obviously in the context of decentralized technologies, one law that obviously comes up most of the times is your data protection laws, in terms of how do we sort of ensure that data protection laws are applicable to blockchain or DLT networks where there are different nodes spread across different jurisdictions. So I think my question to Dr. Salami would be essentially, are existing financial regulations or our existing laws designed for centralized systems well equipped to sort of respond to these developments in decentralized finance?
So, as I had said in my introduction.
Go ahead. I was not able to hear you initially. Okay,
can you hear me now? Brilliant. Yeah, so as I had said in my, what was meant to be an introduction, so existing financial regulatory regimes, as Sumita and as Professor Anna has spoken about, and as I had said earlier, really don't cater for the types of risks that we're seeing emerging, whether they're sort of risks and the evidence of money laundering that we're seeing happening, the risks of the cybersecurity risk that obviously we need to look at. And as again, Professor Anna sort of shared some insight as to how RegTech can be brought on board to actually sort of help deal with those areas. And so existing regulation doesn't quite cater for these issues. And yes, we've seen quite a number of research out there, research done by the BIS, for example, talking or assessing mechanisms through which actually DeFi protocols can perhaps potentially be subject to regulation. And I think this is where we began to sort of look at, and as we mentioned earlier, about embedded regulation. One of the areas that I've sort of looked at in sort of looking at DeFi, the risks and challenges as reflected in the paper that you've put there, is looking at the potential for actually coming up, because we know that they're quite, obviously, DeFi it's really growing. The potential to actually have standards for DeFi protocols, basically, internationally, or if you like, globally, standards, global standards for DeFi protocols. And I think what that would then mean would be that regulatory authorities would need to be able to, if you like, upscale enough to be able to assess or look at DeFi protocols. Of course, this would require that we begin to rethink how regulatory authorities, whether financial services authorities or conduct authorities, actually have or bring on board expertise that are able to assess DeFi protocols and to see if they're compliant. This would, of course, require that we have regulators that are able to code, understand coding, able to understand how to develop standards in this area. And I know that in certain quarters, the regulators are beginning to contemplate and consider these, some of which may require, to a certain extent, the outsourcing if skills and sort of, in-house at the moment. And this becomes quite pertinent because of the evolution of the marriage that we're seeing now happening between traditional finance institutions and the interest to actually operate within the decentralized finance space. So recently, as at I think the first few days of November, I think maybe actually the 1st or 2nd of November, we actually saw the announcement of a project called Project Guardian that involved, I think, the Monetary Authority of Singapore and working very closely with the DBS and DIX exchange, as well as working quite closely with Onyx of JP Morgan, which is digital asset branch. And that project basically looked at the opportunities to, through tokenized assets, engage in foreign exchange transactions. And one of the things, engage in foreign exchange transactions using DeFi protocols. And one of the things that also looked at was to present, because now we're bringing in traditional financial institutions, was to present and the opportunity for there to be if you like, meeting or taking the requirements of the identity of parties that can be transacting through these mechanisms. And they were able to actually do that project, or that trial actually succeeded, which basically kind of reveals or shows us that there's a possibility. And as we're looking at the future emergence, if you like, of decentralized finance, there's a potential that really traditional financial institutions can have a significant play or role within that space. Then it then behoves that we actually do have the regulatory mechanisms in place to be able to actually ensure that transactions that now involve traditional financial institutions are properly regulated. Again, to avoid the issues that we've spoken about, financial stability issues. Of course, now we're bringing on board traditional financial institutions. And then, of course, all the other issues, particularly if we're going to bring on board retail investors, or if there will be retail investor interest as involved as well. So basically, those areas of financial regulation that are quite pertinent, financial stability, and particularly in the space as we're looking at that DeFi engages in, particularly when we look at investment services and investment services potential, then the huge relevance to actually protect investors, and then marketing integrity issues as well, quite significant. So there's a need that not just only do we need regulation that's robust in the space and the speed in developing those types of regulation and regulatory infrastructure, as well as upskilling regulators, there's a need and a speed to actually begin to look at those issues, because the industry is fastly advancing and fastly advancing beyond now just that whole decentralized space, but into actually the space of our traditional finance. So there's a need to actually get that on board. And then, of course, we have the international regulatory framework that needs, there's a huge degree of international cooperation that's required here. There's a need for countries to be able to, for us to have standards as to how we want to approach the regulation of the space, because the transactions there are quite global. And there's also a need to actually bring on board the various parties. So, bring on board the technologists, bring on board, of course, the regulators, the DeFi protocols, investors, developers, in order to be able to craft these robust regulatory regime. It can't be done just by regulators. There's a need for that. There's a need for that cooperation with industry as well, I have to say.
Sure. Thank you so much, Dr. Eva. I think both Professor Honor as well as Dr. Eva sort of highlighted about perhaps the need to now respond to some of these developments. I mean, the market is sort of expanding. I mean, it's been so many years since we heard about blockchain, through Bitcoin. But I think policymakers are still sort of debating, deliberating on a lot of issues. I mean, in many countries, we are yet to see responses to even crypto assets. India definitely being one of them. Sumedha, just wanted to get your thoughts in terms of this. How do you think that it's high time that policymakers now start thinking about, possible policy approaches to DeFi? Or do you still think that this idea of first looking at different building blocks of DeFi, where it might be even crypto or anything, or, is it something that, we should now start thinking about regulating the market itself in general? Or do you think it's still sort of too early to talk about regulating DeFi?
Yeah, thanks. That's a really good question. I think the industry and a lot of players who want to be serious have been asking for regulation for a long time, because they don't want to operate in an uncertain environment. So I do think that there have been a lot of calls for regulation, and we see the real consequences of not acting soon enough right now. Like, these news cycle after news cycle, we're seeing real people affected by the consequences of not having clarity. And I think that is really heartbreaking to see, because as Professor Arner raised, a lot of these are not new questions and they're not new problems, particularly when it comes to the centralized elements of this space. Humans have exhibited a lot of the same behaviors, exactly as Professor Arner said. And so I think it is very sad to see that some of these issues, like consumer protection, were not taken seriously enough early on. And I think, there are some kind of entry points that I think are clearer to DeFi than others that are more reflective of the models that we've seen in the past. So where we see centralized exchanges and intermediaries, where we see the on-ramps and off-ramps to these systems, that's where the KYC can and is taking place. I think we're seeing now regulation around the world on stable coins in response to a lot of what's happening, starting with the Libra announcement. I think that's really where things picked up. And now, with Terra and Luna, I think we're seeing stable coins as kind of a place where people are focusing their regulatory attention. But the unfortunate reality is, I think that policy and regulation has followed the news cycle instead of thinking proactively about what are the needs of a new financial asset class and financial and technical system underpinning some of this stuff. And so I think obviously it's the nature of the beast with policy and regulation. These teams are juggling so much, and I'm very sympathetic to that. But I think if we continue down the path of reactive regulation, more people are going to get hurt in that process. And so I do think it is time for us to take things very seriously. And I will say, I think there's been a huge uptick in activity, particularly on the international level in the past year. So we're seeing a lot more activity out of the BIS. Financial Stability Board just put out their big consultation on crypto assets and stable coins. MiCA out of Europe, I think, is the most comprehensive framework that we've seen to date. UK, I think, is going to follow suit with its recent act. So, we're seeing momentum pick up. It's going to come down, I think, to the political realities of the moment with a lot of these institutions. But I agree completely with what's been said. I think there needs to be more international coordination. This is a cross-jurisdictional problem. I think there needs to the role of technical standards needs to be taken very seriously, because I think it is different from traditional financial services in that way, and that there's a large technical component. And until we are straightforward about that reality, we're not going to make regulation that captures the full kind of range of risks and rewards within the system. And I do think, we need to kind of identify what is the biggest ROI in terms of consumers and financial stability. We know where the majority of assets are held. We know where the majority of retail consumers are. You can get a sense of where the institutional consumers are as well. So I think starting with what's going to be the biggest ROI on some of this policy and regulation, rather than trying to boil the ocean. I think that's what needs to kind of happen, and thinking proactively about how do we think beyond the news cycle and think about the ecosystem as a whole. And I think that's really thinking about this system in an integrated manner, right? So not just thinking, here's the one thing that's happening right now and today. It's thinking about, what is this connected to, and what are the interdependencies present within the system? So how do we think more big picture about policy and regulation? Because I do think those interdependencies are going to be the dominoes that fall if we don't think about them in advance. So if we regulate and make policies very narrowly, create unintended consequences in one narrow segment, that this is such an integrated system, and in many ways a centralized system, as we've discussed, that there can be knock-on effects if we're not thinking ahead as to those points of dependency and integration.
Sure. Thanks a lot, Sumedha. I think completely agree with you that I think we need to account for these interdependencies and perhaps think about it from a big picture point of view. I mean, since we are running out of time, but I'll just quickly take one question that's been put here, and also something which actually came up during yesterday when we also had a discussion generally on blockchain with some experts, is the fact that to what extent, I mean, I understand that perhaps complete decentralization is something that we are yet to see, but this whole idea, discussion, debate about decentralization in the financial sector, just wanted to get everyone's sense in terms of, is decentralization even desirable for a financial sector? Is complete decentralization desirable for the financial sector, considering that I think intermediation through financial intermediaries or financial institutions has worked well for so long? So just a kind of a sort of a basic question that seems to always come up in this discussions on DeFi is decentralization even desirable for the financial system? Anyone, you can sort of feel free to sort of give your thoughts on this.
I think, to be honest, I'll go first, actually. I think there are positives to decentralization, and I'll be very brief. And particularly when you look at the fact that in developing countries, for example, the huge percentages of populations across developing countries are excluded from financial inclusion. So therefore, DeFi has a potential and a significant role to play here as a positive, to bring them on board, to be able to transact on this peer-to-peer basis, obviously facilitated by the technology. Now, the tools that they're going to be using and the mechanisms through which they're going to use to do these transactions using crypto assets, for example, because they're quite volatile, and because when we're talking about developing countries, we're talking about people that are financially excluded, and financially excluded because they're not they don't have enough to be able to come on board with traditional finance. The question then becomes, how do we kind of protect them in using these types of assets that are very volatile, and in some cases, the stable ones potentially stable ones quite expensive to access. So I think there's a huge potential here, but it's now a huge potential from a financial inclusion perspective for particularly developing countries. But it's how we protect them as they engage in this space. And CBDCs are one area that we could potentially sort of look at and the role that can play in the space. Thanks.
Sure. Thanks a lot, Dr. Salami. Professor Arna, Sumedha, if you want to sort of add your thoughts.
Just make a quick point. And the first is that if we look at the traditional financial sector, it's definitely not perfect. It's prone to lots of instabilities, lots of issues and challenges. And so it makes a complete amount of sense to think about if there are new technologies that enable us to think about perhaps doing finance in a better way than we have evolved over time. Those are things that we should be exploring. And to the extent that we find things that do work better, we should be adopting and using those. The challenge is that so far, we've often found that many of the same issues that we've seen historically in finance have emerged in the context of this new technology as well. And so that, I think, is really the central challenge is, the potential one can argue for, but the reality we maybe haven't managed to get to, but that doesn't stop the validity and importance of trying to think about ways to make finance work better.
Sure. Thank you so much, Professor Arner. I think we've sort of run out of time, so I'll quickly wrap this up. Thank you everyone for joining today, especially our panelists. I think they've helped us to sort of deconstruct what decentralized finance is, a sort of a term which perhaps very few, who have been working in the sector seems to understand, but I'm very happy that, you've helped us to navigate through some of the concepts of DeFi, help us understand some of the risks and perhaps also the innovation potential, which always seems to be the question in terms of why do we need decentralization in the financial sector. So I think these are questions which have been quite helpful. And I think even for policymakers, as we kind of understand that, while I think a lot of them, including regulators in India, seem to be generally sort of looking at the issue, but perhaps it's also sort of time to think about policy approaches and regulatory approaches, because if crypto asset regulation has taught us something, is that it's better to sort of respond earlier than to wait for the market to become too big to regulate. With this, I'd like to sort of conclude the session. Thank you so much, everyone, for joining us. Thank you for your time. Have a great day. Special thanks to Sumedha and Dr. Salami for joining us so early in the morning. It was great speaking with you all. Thank you once again.
Thanks, everyone.
Thank you.